Yeah. I had the mic off because I'm just waiting. I'll give it a few more minutes for people to join. I'm just gonna go refill my water and uh, run to the bathroom, and we'll start in like 5 minutes or so. Just give it. Let me just do one more announcement. Hold on. Come join live stream. Waiting for a few more people to join the stream. So we'll start in another 3 to 5 minutes. Alright, just give it a few more minutes for people to join and then we'll dive in. But audio works. I just had it muted because I was waiting a few minutes for people to join. Alright, I'll be right back anyway. Hey. So, oh, I got a mess. Hold one sec. That's shit everywhere. Unlikely. I don't expect to be able to make any trades right now, but there's a lot of important stuff to go over, and it's possible we could actually see a reversal really soon. So let me explain what I'm thinking. I'm trying to look at a couple things really quick, and then I will show you what I'm thinking, because I haven't actually looked at. I wanted to get fresh eyes on and just use a chart that didn't have as much crap on it, so that's why I have this Binance where I've been doing most of my charting lately, and then this is the Coinbase pair, and that way it's a virtually identical chart, but there are some minor differences, but nothing significant, except this is kind of wide open. So this is why it's kind of cool. I did all my TA work on Bitcoin on the Coinbase pair back here, right? And then it was so cluttered I couldn't really see anything on the chart. So then I started using the Binance pairing, BTC USDT on Binance. And now this is all super cluttered, right? So it's hard for me to really see. Like when I'm looking zoomed in on the hourly or something, it makes perfect sense. I can see everything. But when I zoom out, there's just too many lines and too many different notes and analyses on one screen. It's impossible. So that's why I switch back and forth. But we're going to look at macro, and I could show you what some of the various supports are we're looking at, ways I might see it playing out, and I'll tell you why I think we're actually going to make a big bounce pretty soon, but there's a couple ways we'll have to go over it. A couple ways it can play out. So, but we might actually see it. If we're going to get a big reversal, we might see it pretty soon. So I'll have to show you what I'm thinking. And I can explain that in a sec. Where's volume? Here we go. There we go. Get the volume up there. I guess there's actually some bullish diversions there too. Yeah, there's a lot to be bullish about. So I'm going to break down like in detail. I want to go over a couple different time frames, a couple different things, Ichima, Stokes, some other stuff, geometric formations, like everything I look at, the totality of the picture I'm seeing here. Anybody who's bearish from here, who thinks we're going to go back below 30K, they very well might be right. I might be wrong, but I don't know where they're seeing that. So I'd be curious to know if any of you guys have an analyst who you like and you trust, and you think that they're a good analyst, and they're giving you a model that takes us down to 18 or 20 or 22K. I'd really like to see what they're talking about, because I just don't see that. I mean, we might quickly dip down. Like, we might hit 30K and then have, like, a quick wick just to, like, 29 or mid-28s, maybe. A really quick wick and immediately go back. It's probably possible, but I really think that 30K is going to hold, and if it does break, it would be, like, a really quick wick. Like, I'll show you in a second. And I'll tell you why I'm thinking we could be seeing that bounce really soon. Hopefully this time is much more aggressive than the last couple bounces. So just initially, we're looking at a couple things here. You can see we had, like, imagine we had the big dump, right? And then after that big dump, I said we're going to get a move up and then come back down, and then we'll start that next big leg up. It's pretty much exactly what we had last year. May, or the March dump rather, where we had can't really see it on the daily as well, but the big dump down, and then the recovery up, and then down, and the next leg up and down. We're seeing it's essentially the same thing, but not as aggressive of a move, because it was a lot different. This, first of all, was a much, much bigger dump. That dump took us all the way down to back to almost freaking 3K. That was insane. So that is a lot different. That big dump, and that was a black swan event, just a massive sell-off. So the recovery out of that was a lot different. After we started that recovery, we started moving sideways here for quite a while. It took us like 2 months really of sideways action before we started that real bull run push where we got that first push up, another retrace, and then we really went parabolic towards the end of last year. Now, this time around, we had also a big dump, right? Not nearly as big as that one was. It wasn't as much of a dump as that, but I'm going to explain that in a few minutes too. Because what I want to explain is on the way up during these parabolic bull runs, see how we had a big run up and a correction, a big run up and a correction. These really were not very big corrections. So this entire bull run all the way up, we started going parabolic. And if you go back to 2017, you'll notice you have these big runs up, and then every once in a while you'll get a bigger correction of 50, 60, 70% sometimes, and you'd get really big dumps. And we just weren't getting them. We started getting some corrections up here, but for a while, we were barely correcting at all. So we really were in desperate need of a larger correction. And a longer term correction that doesn't last just a few days. Like we really needed a correction that was several weeks to several months long. Now we're also looking down the barrel at a 6 to 12 month long correction, but I don't think that happens just yet. It could, but I suppose if there's time we could talk about that too. But I'm going to want to explain some of that as well. But comparing this to what happened back in 2017, as soon as we hit down at that 30K level, I thought we were going to come back down and get close again, and sure enough we did, right there. And then we had moved up and another dump down, and then moved up. Now, I was actually hoping on this move down that we were going to stop right here, where we were a couple of days ago on the 5th. Then we started getting the green candle, and I thought we were going to bounce, and then, of course, it dumped again. But you can see why I was so in love with that setup there, because we had such a great trend line. Boom, 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 boom. It was riding the bottom of that trend line support, and then it failed. So the fact that it failed is definitely a bearish indication. There are several bearish indications here that you should consider. But as far as getting back to all-time lows, there's several variables, or at least a local low, several variables at play, and why I just don't think that's going to happen. So we had these individual bounces, kept getting rejected from the 222 EMA. That's going to be relevant, especially later on. That's a key Ichimoku dynamic resistance in this case, just like the 55 here was a big Ichimoku dynamic support. Down here, right here, over here. If you bought in every time it dipped down to the 55 EMA, you would have done well. In theory, you could probably short every time it hits the 222, but eventually it's going to hold. Eventually, we're not going to get a big dump, and we're going to break past the 222 EMA. So, it's similar to what happened last year, except it's taken us a while to start that recovery run. It looked like it was starting to come together, and now things are slowing down. So I understand where just the chart doesn't look great, and people might be a little bit bearish because of that. But when I look at all of my models together in unison, there's so much going on that I have to be bullish about. So if we were just starting and moved down like this, and it looked like we had no hope, I would understand the sentiment that we might even go back to a new local low and break below 30K. I still don't think that's going to happen, especially when you consider what we're looking at with the other aspects of my model, like the Stoch oscillator, right? Now, even when we're struggling to really get that bullish recovery run and that big pump, that big extended bullish run, we're struggling to get that started. So we had the first bounce back, and then a dump, and the next bounce back up, and then a dump, and the next bounce back up, and now we dumped again, right? How many is that? Wait, 1, 2, 3, 4, 5. We're not seeing huge swings per se, so it's not like we had a big reversal where we had a small move down and then a really big run up. This entire segment has been mostly sideways. I mean, I guess a little bit you're getting into a wedge, and it did fail in that wedge, and that's something I had highlighted that pennant earlier. But as far as setting a new all-time low, that doesn't really help us there. So if you're thinking, we failed to hold at that trendline support, so that might mean we're going to keep going down. Well, we are. We're going down right now. We're already down, 8-9%, right? And we have a ways to go. After breaking that trendline support, we can, in theory, go all the way down another 13% from that start of the dump, all the way back to close to the prior bottom. But I think there's a really high probability we reverse before that. So let's look at multiple time frames. This is the daily. The other candle just started recently, so there's still 20 hours left, right? So the Stoch in this particular case on the daily is getting awfully low. I mean, even the last bounce never got this low. And down here, it gets thrown out of whack because we were in the middle of like a massive dump, right? But there are a few things about it that I like. I like that we have the Stoch here is getting really low and it's getting really close to reversing. In fact, I would go so far as to say that because of how the daily looks here, and you'll see in a second when I drop down to the 4 hour, that's why using multiple time frames is always so key, right? So essentially, with this Stoch getting really low and starting to slowly turn back, and it looks like that could be a reversal, that doesn't mean it's necessarily going to bounce for sure. It just means it's probably really close to bouncing, and when it does, it might have a really strong run there. But if you look at the weekly as well, the weekly doesn't have nearly as well of a defined Stoch of late, and this is what happens when you're hyper bullish. Over here, we had this consistent up and down cycle on the weekly Stoch, and then we got really high, and when we first got up to these higher levels, I had said we're either going to go hyper bullish and we're just going to move sideways as the price continues to pump, or we're going to correct and come back down. I actually exited several of my trades at that point expecting it to come back down once we started to go hyper bullish, where the Stoch was just going sideways and we were shooting up in price. Once that happened, I obviously just went for a ride because I knew we were hyper bullish and we were going to go up. So the point is, over here, ever since that started, we haven't had a repetitive cycle up and down, you know, a nice clean wave structure on the Stoch, but look how low we are. So even though the Stoch isn't that reliable now, we're not really seeing a repetitive structure like that, the fact that we're back down to these oversold levels is huge. Look where the support is on the weekly, right at the 99 EMA, right? So there's so many aspects about this that make me really think that we're going to get the big run. I talked about it very briefly on a video I posted to Twitter, and I mentioned it. I pasted it to the group as well. But we have a vertical cloud wall here on the weekly. That's a really bullish sign, although that's kind of further out. The 55 EMA here looks really good. The Stoch resetting on the weekly. If I'm right, if this is a bounce, so imagine this. We're zoomed out because this is the weekly. What this technically amounts to, we're on the 55, and we haven't actually had big bounces on the 55 lately, right? So it's not like we kept bouncing on the 55 on this weekly chart, and we kept going bounce, 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 and this is the 5th time it's happening, so we might break through, right? Let me go back and show you what I mean on the daily. On the daily, I just showed if you guys bought in each one of these times when it was bouncing really close or right on the 55 EMA, if you bought in those times, all the way in the way, this time it got close, this bounced pretty much right on the 55. After like 6-7 times in a row where it bounces on the 55 EMA, which is one of my Ichima dynamic supports, then you get a big bounce up, right? So that happened 6 or 7 times, and eventually it failed. After a while, no matter how great a support is, eventually it's going to fail, right? Now, if we see this exact same thing transpire on the weekly, we haven't even had that first test of the 55 since we went on the parabolic run. This is really it. So in theory, this could be essentially where we were on the daily chart, but much earlier. We're coming down to the 55. If we hold in this general vicinity, right as the Stoch is reversing, this could be just a zoomed out version of that. Just a much bigger version of what we were talking about, what I was just showing you. Because on the daily, we had these big bounces when we hit the 55. If we get that same sort of effect on the weekly, we're talking about a massive run, which takes us all the way up to essentially what my original target was, which is 75K, if not even more. We could get a really big bounce off of here. I'm not saying that's definitely going to happen, but it's obviously possible. And the low RSI, the low Stoch is very reassuring that the weekly could be really close to a reversal. So now we have the weekly, which is fully reset. We have the daily, which is almost close to getting a bullish reversal, right? We talked about that already. That's getting real low, and that one might actually turn up. And then what you also want to notice is we have a really strong horizontal support where that 30K is. So in addition to seeing the Stoch on the weekly and the Stoch on the daily, and even the Stoch on the 4 hour is getting close to a bullish reversal, we have all these time frames that have this low Stoch, which if it was just one or the other, like one of the reasons I was wrong on the last couple times I tried to get into short-term trades. for the last few days I've been telling you guys short-term trades are really risky, but long-term entries really aren't that bad right now because in the long run we expect to go so much higher. You don't have to get the exact bottom. So if you're going to get into like a mid or a long-term hold, it's probably worth buying a little bag here, not going all in because you want to have capital in case the price goes lower so you can buy lower, right? But I've been talking about expanding my mid to long-term holds for that reason. But the reason why the attempts that I've gotten into lately of getting into short-term trades, I've failed like the last 3 times. Well, actually, not today. I got into a couple trades today and a couple yesterday. Those failed. 2 days ago when I got into that batch, most of my trades actually broke out for like 10 to 15% initially. Then they ended up coming back down. But in that particular case, I moved my stop loss up, so I didn't lose any money. So I don't really consider that a loss per se. But the reason why my model didn't really hold up is because I was trading based on that one time frame. I was looking at the hourly, like earlier today. I got into a couple trades earlier today, and I was saying essentially with the hourly resetting, it looks like we're going to get a nice bounce. But you can see we still remain bearish. Even when we were getting a reset on the Stoch, we were still trending bearish. Well, that's because the 4-hour was coming down, right? So the 4-hour was in the middle of a bearish reset. So even if the hourly model looked like it was going to bounce, we would probably end up with one of these small little bounces like that and then a bigger move down. And I've talked about that a lot, where if you're looking at like the 4-hour chart and the 4-hour Stoch has this big wave down, right? That means this entire period overall you're going to be going down. So if I'm making trades based on the hourly, I'm not talking about this whole chart. This is the 4-hour chart, right? So essentially what I'm saying is if the 4-hour chart shows the Stoch is coming down, that might mean that overall we're going to have a downtrend like this. But when I'm trading it based on the hourly, what I'm talking about is I plan on having a down, and then I can trade the up, and then a bigger down, and then I could trade the bounce. A bigger down, and then I could trade the bounce. So when I'm doing those short-term trades, I'm talking about getting in and out relatively quickly on each of these small bounces, right? Because the overall 4-hour trend is telling me we're still going to go down. What that means is each time you go down, you're probably going to go down much bigger than the bounce up. That's why the example I gave you where my initial trade broke out like 15% and then I ended up getting stopped out at my break-even point, that's why, right? I predicted the bounce perfectly. I mean, even earlier today, I predicted, what was it? Hold on. Like initially, right, I got into BNB and initially I got in right here. We initially got the little bounce, right? You see the Stoch was turning up right here on the hourly. So I predicted this bounce so perfectly. But what happened is since we were overall bearish with that 4-hour model being really bearish, this bounce up on the Stoch correlated to a really small bounce up on the price action. I thought it would take us all the way up to this trend line right here, so it was still worth getting in, but it didn't make it. It ran out of steam really quick, and then it came back down. So now, the current situation we're in sort of corrects for all that. So the problem that caused me to lose money on my trades today and yesterday is no longer an issue now, because now we're looking at multiple time frames that are simultaneously showing us confluence. Is everybody with me so far? I'm going to explain again in detail because I mentioned this at first. Again, so I was making a trade expecting this hourly bounce, but while that was happening, if you go up to the next time frame, the 4-hour was still bearish, right? So I was betting on the hourly chart giving us that nice little bounce, but overall there was a much larger downward trend that was pushing us down, and that's what happened with the 4-hour driving us down. So because that happened, I ended up getting stopped out. But now if you look at what we're seeing, the 4 hours resetting, and if we go up a time frame from there, it's not like the daily just started a downtrend. The daily is really close to getting a reversal. The daily might actually turn back up. I'm still on BNB. Let me go to BTC. So the 4-hour is now starting to reset, right? So if earlier today, if the hourly had perfectly reset, and the 4-hour was really low like this, I probably would have done better. But because when I got in on that hourly bounce, the 4-hour was still so bearish that overall trend took us down, and it caused my hourly bounce to run out of steam really quick, and it just couldn't keep that bullish trajectory. It failed, and it went back down, and I took a small loss. keep in mind, when I lose on trades, I'm taking a small loss. That's the whole point of my models and strategies, right? I'm managing my risk well. I'm setting a tight stop loss. So it doesn't hurt that much. But that's essentially why my trades failed. So this time, we definitely don't have that. Not only do we have the 4-hour resetting, we have the daily getting really low and starting to reset on the Stoch. And then on top of that, the weekly is also really low and oversold. So that's also got a solid prospect of a big bounce. So just the Stoch model with multiple time frames, looking at the hourly, the 4-hour, the daily, all the way up to the weekly. We have confluence where essentially all of those time frames simultaneously have that same low Stoch where we could be starting a run up. And what that means, the only time you see that sort of setup is when you get really big runs, right? So let me show you what I mean. If I look at the weekly chart, for instance, on Bitcoin, the last time that we were down this low was before the last big bull run up, right? And even before that, if you zoom in, the size of these moves based on those weekly resets are much larger. So even before that, we had this turn up right here was the start of that really big run, was this bullish reversal on the Stoch. The bullish reversal on the Stoch before that was right over here. If you file that up from right here, we're still talking about a 43% pump, right? So once the weekly gets this low, we're talking about a 43% pump. Now that's probably going to be a key difference. I actually haven't looked at this yet. Holy shit, yeah, I was spot on. All right, guys, check this out. This is really cool. I didn't actually plan this out. I just noticed it because this happens to be on the chart. This was the big dump from last March. Look where the weekly was when it dumped last March. This perfectly explains it. I didn't think of this before. I'm such an idiot. I should have realized this. You guys see what I'm getting at? So when we had that big catastrophic dump last year, the COVID dump, that was when the weekly Stoch had fully reset right as that dump occurred. So when we started that recovery bounce, we were able to surge back into that recovery bounce because we were starting a really bullish new cycle. And that new bullish cycle, that weekly, took us up like crazy, right? See how aggressive of a recovery that was? Now, if you fast forward to where we are now, on this dump, right, we were just in the middle of nowhere on the weekly Stoch. We didn't have a full reset with that nice oversold lower Stoch level, right? So that's why it took so much time after we bottomed out here. We still had to bottom out. We still had a downward trajectory on the weekly. Now that that's actually reset, we might finally be ready to make that bigger move up. So these higher time frames are a really big sign. The monthly is still quite high, but the same principle applies. In the case of the monthly low, I don't have to worry about it like I did with the hourly. So you know how I showed you on the hourly looked bullish, but the 4-hour kind of looked right. Exactly what we're seeing here on the monthly. That's what the 4-hour looked like when I got into the hourly today, right? Except this is not as problematic because the hourly bounce lasted 4 hours. It just ran out of steam and it came back down. But we're talking about not just the hourly. We're talking about the weekly turning bullish, the daily turning bullish, the 4-hour. So all these time frames simultaneously look like they're about to get a bounce, right? So just the Stoch alone is really reassuring. So I'm really bullish because of the Stoch just by itself. I really like that. Now, what else do we have? We obviously have the weekly model looking really bullish here with the 55 EMA, that Ichimoku dynamic support, providing a really, really strong support, right? If we drop down to the daily, you'll see we have some bullish divergence here where we have a continuation of this downtrend right here and an uptrend over here, right? So now we're starting to see some bullish divergence in the RSI, which is usually a good, strong sign. Do we have any geometric formations on here where we don't really have any sort of, any wedge formations per se. Yeah, we don't have anything like that, at least not on this one. Let me drop down to the 4-hour. I just want to see if the other time frames give us any more detail. No, I guess not really that sort of stuff. But what we do have is another horizontal support. So the reason why 30K was such a strong support before, there are a few reasons why, but there was a really strong horizontal support right here. That's why we held at 30K. So when I say I don't think we're going back down below 30K, it's not just because that's where we happened to hold last time. 30K was already an established support, and if you go back here, you'll see why. All these candles, even this big dump here, right? Big dump candle bounced right at that 30K level. This dump held right at that 30K level with a slight touch through the 55 EMA. So we have a really good horizontal support and resistance right here. So now that's exactly where the 30K was on the big dump. So we might dip down to 30K again. It's possible. I really don't think we go lower than it for a few reasons already. We talked about the horizontal support here. We talked about the stochastic oscillator on virtually all of our time frames are starting to look really bullish, right? We also have some bullish divergence on the RSI, which is another bullish indication. But most importantly, that 30K. Now, what happens if we get a quick wick down to 30K and we hold right at 30K? Well, that'll end up giving us a double bottom, which is another bullish indication. So overall, there are one or two things here that make me feel like it's a little bearish. But once you look at the higher time frames, they really don't matter anymore. Like breaking south of this triangle, this pennant formation, isn't necessarily catastrophic because we still have so much support here at that horizontal level. I don't know if I... Let me see something. Oh, no, that doesn't really fit. My throat's getting all scratchy again. I feel like I've been rambling for a while. I'm gonna go refill my water cup. Anybody have any questions? Use the YouTube chat if you have any questions so far. If you're newer and you don't understand some of the concepts I'm talking about, feel free to drop a comment in the YouTube chat. Ask me to explain in more detail, and I can explain it slower and I can clarify a little bit. I really want you guys to understand this because, again, I'm not saying I'm not guaranteeing anything, but I gotta tell you, this really seems like we're gonna get a big bounce. Like we're going to see a much more aggressive recovery run. And if you don't see exactly what I explained and why I think that, then let me know and I'll explain it in more detail. But I'm telling you, if you go back and you look at what happened with the initial COVID panic selling, right, that big dump, the only difference between back then and this big dump now was the way the Stoke was on the various time frames, specifically the weekly time frame. I got more to show you guys. This really does look bullish. The problem is it's just too risky because we just broke this trend line support, so it makes it really tough. I don't want to enter into any more short-term trades because I took a loss on a couple of them. A very small loss, but I still took a loss on a couple of them. But right now, it's just so hard to predict the exact bottom. Like I'm starting to feel like pretty confident that we're going to bottom out anywhere from the exact current price to down a bit more, closer to that 30K support. I don't think we're going to break below that 30K. Yeah, there's so many other things going on right now. I don't want to go off on another tangent. So, all right, I'm going to go grab some water. Some of you guys have to ask some questions because I just kind of explained. I know I'm good at explaining everything for noobs and breaking it down to a basic level, but I'm sure you guys have some questions. So please, I'm asking you, please ask questions. It always helps me to understand what concepts I'm explaining that people might not understand. It always helps me to know if there's something that I explained and I didn't really give enough detail, or I didn't explain it that well, or I went too fast. It helps me to know that so I can correct it for the next person who really does need to learn it. So please ask questions if you can think of anything at all that I might have not explained perfectly or you might not perfectly understand. All right, I'm going to go get my drink, and then I want to look at a couple more supports again, and then I'm going to look at the altcoins with you and see if we can pick out those alts, because if I'm right, we don't have to say, all right, we're going all in or anything. We don't know if I'm going to be right, and chances are, because the weekly, the daily, the 4-hour are all giving us confluence and suggesting a bullish reversal could be imminent, what that tells me with the weekly being set up for that is we could potentially see a 50, 80%, 100% run on BTC like what happened the last time the weekly was this reset. Because remember, we haven't had a reset like this on the weekly since September, the start of the last explosive bull run when we went parabolic. We haven't actually been this low on the Stoke since then. So there's so much potential. It's insane. One of the things I want to do with you guys is look at some of the alts and see if we can figure out which of the alts that are going to break out the most, that have the biggest potential recovery runs. Because if I am right, again, I'm not guaranteeing anything, but given the size of this potential run, you don't need to get in at the exact bottom. You can wait until it starts to pump and it's up another 5 or 10% and get in late, because chances are, if my model is right, it's not going to be something where if you don't get in right away, you miss out. If you miss out on the first 3 days of a run like this, that's fine, because we're going to have 3, 4, 5 weeks of a potential run like this. So we're going to go on such a big pump, you don't have to get in at exactly the bottom. It's almost smarter to get in later when you're not taking as much risk. All right. Drop any questions in the chat. I'll be right back in a few minutes, and then I'll answer those questions, and then we'll start looking at some of the altcoins. Because if we can spot the right patterns, similar to what I showed you in BTC, if we can find some of the alts that have a similar pattern, the next thing you want to do is look at those altcoins and see which ones performed the most the last time we had a setup like this and more recently, and that'll give you an idea, if we do break out, where are we going to see the most aggressive pumps. That's why I was able to come up with certain trades like DOT and SRM and Matic. Recently, I had some huge trades on Matic. They had pumped a lot. FET had pumped a lot. So I'm good at finding those trades that go on those big pumps, because you have to look at patterns. And if you can spot those things, you might be able to predict them before it happens. So we'll take a look at that in a minute too. Keep asking questions, please. I beg of you. It really does help. All right, I'll be right back. I hadn't even run upstairs yet, but the questions you guys just asked are so perfect. I'm going to explain those in a minute. I have really good answers for all those. So if anybody else has other questions, drop them in the chat. I'll be right back. All right. Okay, so let's tackle the questions you guys had first, and then I got other things that I want to show you. There was one or two other things I wanted to tell you guys about that were potentially bearish, and more things to add on to what I already talked about and why it's potentially bullish. But let me answer the questions you had, and then maybe they'll come to me, and then we'll start looking at these alts. Again, like, probably not going to enter trades now, but some of them could be close. I can answer one of the questions you guys asked. Actually, will explain just that. Like, everything's red, and you already talked about how it's too risky to try to catch knives and get the exact bottom. Why would you enter now? Well, I'll explain that for one of those questions, actually. The last one from Frank, I think, right? Or Leo. Well, both, I guess. All right, well, let me start with the first one. How strong is the technical target of the breakdown from the triangle? Would that be 22K? Not necessarily. So it depends, because it depends what supports there are. So there's no specific technical target. The target would be, well, what supports are down in that area where you could potentially get that bottom. Because you're always going to bottom out almost every time on a support. Now, it's possible there's some sort of support that you don't see on your chart. For instance, if somebody wasn't using my Ichima Dynamics indicator, right? If they didn't use my Ichima model, they wouldn't have the 55 EMA right here. So they would be seeing this right now. To them, it's probably like, oh, it's at a random area. It's currently sitting at 32K. There's no strong support specifically right there that would hold at that exact level, right? So they might not see that support we do. So pretty much always when you bottom out and you finish a dump of some sort, you're ending up on exactly where strong support is, right? You just might not always see that support. So in this case, I would look at the various supports. We have the 55 EMA, horizontal support at 30K. The next main support that I have would be the 99 EMA, which would be in the mid-20s. So if you were looking purely for a support and resistance based on prior trading, what would be the next support? Let me see where look at the daily. The next support that I would see down here, 20K is a potential horizontal support because it took a while to break through that level. But I'm not seeing anything that's much of a support, really. Let me try to stick to the daily, actually. Yeah, you know what? It actually kind of makes sense because this was 20K, right? 19 and change was the bull run in 2017, just shy of 20K, and that's almost exactly where this resistance was. So if you remember, when we actually got that original top, and then we had the long correction over a couple of years, and then when we made that push up again right here, we ended up almost at the exact same level, right? So let me drop a horizontal support there, and you'll see what I mean. So that was the prior top. So on this run up, that's exactly where we got resistance. So that would be a strong support. So anybody who's talking about 18 is ignoring the strongest support on this chart, which is, other than 30K, which is a more immediate strong support because we have more immediate testing of that level all the way from here, from the beginning of January when we first started really breaking out into the final moves of that first parabolic run. This 30K level has been a main support. Besides that, 20K is an absolute powerhouse of a support. So if anybody out there who you follow is talking about a potential target being 18 or 17 or 16, they're completely ignoring a major, major, major support at 20K. And that's one of the main reasons. For people who are in Flux Trading Group Premium Group, you have access to Flux University, where all the educational content is. And in Flux University, I have a couple videos dedicated just to identifying support and resistance. And I talk about dynamic support and resistance and static support and resistance. This is an example of a static support and resistance. No matter what happens to the price or anything, whatever's going on in the market's irrelevant. You already have this one spot here, and you have that same point of contact in 2017. So no matter what, when you get back down to this same level again, that's going to be a strong support. So I don't know where you got 22K from. Maybe somebody else who you follow identified that as a good support. This is the only time 22K has ever been in play, is right here. And it's not like that was a particularly strong support. It came up, it came back down and tested 22K for one daily candle, and then it continued back up again. So I don't even see that as being a particularly valid support. So I'm not sure where you got that particular figure from, but if you saw an analysis, I'd be happy to take a look at it if you want to send it to me. So coming out of, technically we had the pennant here and it broke down. That doesn't necessarily mean you have to keep going. There's so many variables at play. All that means is with the initial breakdown, you're going to continue downwards and not immediately push back up. But think about what happens if you break up from an ascending triangle. You can go up and you can come right back down and test the top of the ascending triangle again. If that doesn't hold, you're going to go lower. So it's not guaranteed you're going to go higher. So just because we initially broke out of the wedge formation doesn't mean, or the pennant triangle formation, symmetrical triangle, doesn't mean we're going to continue downward much further. It all depends on where support is, and there's a lot of support here. The 30K support is a really strong support. If we go below the 30K support, then I will start looking at potential drops all the way down to 20K. I don't foresee that happening. I don't see the scenario where we go below 30K. It's so unlikely at this point to go there. It's possible, yes. It just seems very unlikely. If we were to fail to hold 30K, then without a doubt, the next target would be 24. Pretty much right where the 99 is coming up into. That would be the next target. And then after that, you would have the 20K support, which is the prior 2017 run ended there, and then the stop on the way up on the more recent one. Next question was, all right, now this is big. This is actually really important. So, do you think the weekly could need another week before turning up? Okay, so now with the whole multiple time frame thing, I harp on it a lot. It's really important because at this point, you don't know, right? So you have, it looked like you were going to get an early reversal on the weekly, and then it had that final push down with the big dump, right? When the weekly is reset like this, just like what happened earlier, there were several of the other time frames more recently that had similar scenarios where it looked like we bottomed out on a particular time frame on the Stoch, and it looked like it was going to turn up. When that happens, until it crosses over, until these two completely cross over, and you get a confirmation where it actually closes out a candle with that crossover already complete, indicating a complete change in the reversal, it's not confirmed until that happens. So when you're getting down to this point, if I was just looking at the weekly chart by itself, I would say we could be about to turn up. There's 5 days and 21 hours left on this particular weekly candle, so anything can happen from here. If we were to start pushing back up, then this weekly Stoch would turn up and we get a completed, verified, confirmed bullish reversal. If these two lines don't cross by the end of the next 5 days, then it could potentially take 2 more weeks. But again, the multiple time frame thing is really important. If we drop down, this is the best way to explain it. We have 5 days left on this weekly candle, right? So far, we actually haven't seen the two lines on the Stoch here crossover. So there's no indication that it's actually ready to reverse up. So why do I think that it might happen in the next week? Well, that's where we drop down. If the daily is this close to reversing, what happens when we get a bullish reversal on the daily? Well, we can get, there's a bit of a range, but look at the last one. We got the bullish reversal right here, right? And then we had 5 candles on the way up, right? Now, if we have a 5 candle upward bounce right here, say we were to hold there and get the bullish reversal in 20 hours and we were to hold at this trend line, even if we were to dip down to 30K, right? But let's just say we hold in this general vicinity where all these various supports are, And we do start then getting the bullish reversal, right? So after this 20 hours is up, say we're getting really close to a reversal, the next candle starts off green, and then we start that reversal. Well, that'll give us anywhere from like 4 to 8 green days in a row with that reversal on the daily, right? If we get 4 to 8 green days in a row on that daily on the way up, well, think about it. There's 5 days left in this weekly candle, right? So that means the rest of this weekly candle is going to be green. We're going to recover from here and push upward, which is going to cause the Stoch on the weekly to start to turn up. So then we are going to see this crossover. That's why looking at the time frames above and below what you're looking at are really important, because it will help you anticipate what's going to happen on this time frame by knowing what might happen on the daily. So then if you look at the daily, and let's do the exact same exercise, and this is why I said one of the most important and most bullish scenarios you can have is when multiple time frames have confluence on the stochastic model, right? Because if you're now looking at the daily and you're like, all right, well, let's look at the daily. How do we know the daily is crossing over like what happened over here or what happened over here? How do we know this is ready to cross over? Well, we can look at the next time frame. If you look at the 4 hour, the 4 hour is also getting really low right as we're sitting on a trend line support, right? With another support here at 30K. So that means that if we're only 1 or 2 candles away on the 4 hour model from a reversal, that initial reversal on the 4 hour might give us 4, 5, 6, 7, 8 green candles on the 4 hour chart. If that happens, that means that the daily is going to start pushing up, and we're going to see that reversal on the daily. So when all these time frames have the Stoch that are simultaneously in the same position at that reset lower levels, and especially into oversold territory like we have here on the daily and the 4 hour pretty soon, where they're all showing you that same thing, that's telling you that each one of those bullish moves is going to help the next time frame up, right? So if you have a full reset on the Stoch on the hourly, that's going to help complete the reversal on the 4 hour, which is also really low. And if the daily is really low on the Stoch, well, if we get a bullish reversal on the 4 hour, that'll help push the daily up into a bullish reversal. Then if the weekly is about to turn up, well, if we start a daily run where we get 4, 5, 6, 7, 8 daily candles turning up, that's going to help the next one up, the weekly reversal complete. Does that make sense, everybody? Everybody with me? Give me some feedback on this, because I feel like that's a perfect explanation, and I really want to make sure you guys understand it, because it's really, really important. Because if you spot that same scenario in the future where you have multiple time frames that are all demonstrating confluence with pretty much the exact same scenario, it could potentially be a really good opportunity to spot that. That might be a secret weapon, right? All right, good. I like to explain things simply so people can understand it. I used to be a noob, so I know for people who aren't experienced traders, I know how to explain things so you guys can understand it. But it's been a long time since I've been a noob, so I try to remember how it was back then. But of course, sometimes I might I might explain things a little less clearly than I used to. So I want to make sure that you guys understand it. But Ox just said, it's like a domino effect, exactly. When they're all reset at the same time, it creates that domino effect. And the reason why that's important, again, as an example, today I got into short-term trades earlier today on the hourly, expecting to get a bullish reversal, and it was such a small bullish reversal because the 4 hour was still bearish. If the 4 hour was also reset at the time, then there wouldn't have been such a force pulling me down. That 1 hour bullish reversal could have held, right? So if we keep dropping down, even all the way down to the 1 hour, and this is also interesting, the 1 hour is sort of, we talk about being hyper bullish when the price action is going up and the Stoch just kind of stays high and doesn't actually reverse and come down. Well, now it's doing the exact same thing on the bottom, where the price is coming down and the Stoch's just not turning up, which is fine on the hourly, because all these other time frames are also at those lower levels. And if they were to all fail and all do the same thing, well, then the price comes down and the Stoch model ceases to matter. The Stoch model only works when you have a clear repetitive cycle, right? So far, we're failing. The hourly isn't really giving us any sort of reversal because we lost that wave structure. We had it before, we lost it for a while over here, then we had a nice repetitive wave cycle here, and now it's falling apart again. But I think that happens to be because we're resetting across the board. Because you can see the RSI is super low. I mean, RSI is completely plummeted on the hourly model, which is why I think a reversal could be imminent, even if it's just a smaller one. We can start a bounce here and just get that domino effect, or we could still push down to 30K. I don't know yet. So that's why I don't want to jump in. I would rather wait, because if we wait and we start to see the reversal occur on the hourly and we start seeing the 4 hour looking like it's turning up, we still have the daily and the weekly, and all these time frames look like they're about to turn up. So at this point, it's not a bad idea to get in as like a long-term bag where you're not worried about getting in at the exact bottom, right? If you were to buy right now, not all of your money, because in case it goes lower, you want to keep some on the sidelines, right? But I might add a little bit. I might take, $500, add $500 to my Ethereum long-term bag and $1,000 to my Bitcoin long-term bag or something. And then I can still save money on the sidelines for when we make a decision on how to play the big bounce. But for my mid and longer term holds, it's not a bad idea to enter now, because it could potentially start any minute. And I won't really know which way it's going to play out for sure until we get that sort of confirmation. So the confirmation, if we're going to go bearish, the confirmation that we're not going to get the bullish reversal would be if there's some major FUD and it pushes down below 30K. If that happens, then I'm 100% on the sidelines, because I have no idea what's going to happen. I have different targets that I can set on the way down, like plenty of supports that we can look at of where it might stop on the way down, but I don't know exactly how it's going to play out. On the other hand, if we get the bullish reversal and that gets confirmed and we start to see those Stokes turning up, there's going to be so much potential upside. We could potentially go run bullish for 5 to 10 weeks. If that weekly model turns bullish, it can be quite an extended bull run. So if that happens, I don't really care about buying in all the way at the bottom. I'd be happy to buy 10%, 15% into the pump, because that's probably just the beginning. All right, yeah, so Frank had said, I kind of got into that already. What would be the trigger to get in long? Closing the... So, like I was saying, buying in... I already bought in a little bit earlier on my longer term stuff, so I don't know if I'm going to do more now. Maybe I'll put a little bit more money in. If you were buying long term, mid to long term, and you're not worried about, if you're getting into a trade where you're not going to set like a really tight stop loss, my short term trades, when I have a 1-2% stop loss, maybe my stop loss is up to 3% below my entry at the most. When I get into short-term trades like that, I have to be precise. I have to get in right at the bottom, because if I get in before the bottom, like up here, well, this dip is going to go down and hit my stop loss, because I have such a tight stop loss, right? But my longer-term stuff, when I'm expecting overall that we're going to get a really aggressive bull run for days or even potentially weeks, if I think there's a good chance that might happen, I could start accumulating now and just buy in a bit, and if we start to break out and get that recovery going first thing tomorrow, great, I could still buy in more. And if it does go down to 30K and it tests that support before it reverses, great, I could buy in at a lower price, lower my average entry. And then if the 30K support were to fail, and I figure, you know what, we're probably going to go all the way to 24K, I could close out those positions, and I wouldn't be taking that big of a loss. So I can still kind of play it by ear to an extent. I don't have to commit. But with the short-term stuff, I have to commit, and I have to be in with a surgically precise entry, because I need to be able to place my stop loss really close to my entry. That's why I discern such a difference between the mid to long-term stuff and the short-term stuff. So if you were looking for a potential entry, there's no real specific trigger. It's sort of like, well, let's see how things go. If we start to get a bullish reversal on the hourly, and then that completes a bullish reversal on the 4 hour, and the 4 hour starts to turn up, I think the 4 hour is probably the key. It has been lately. So the times recently when I failed was like today and yesterday. I had failed because I got in when we didn't have a early on in like a bullish cycle on the 4 hour. I had gotten in on these hourly bounces, and on some of them I did okay at first, and then eventually they all dumped and failed because that 4 hour hadn't reset. The 4 hour tends to be among the more important time frames for that sort of thing. So if the 4 hour resets, there's 5 minutes left on this 4 hour candle. So that's why I said there is a chance I might actually be ready to enter into some trades during this live stream. Because in 5 minutes, we're going to start another 4 hour candle. And if it looks like we might start getting a nice bounce, since the hourly is so low, since the hourly is turning up, and that's so oversold, there's a chance that if we get that reversal and start turning up on the hourly, that could facilitate the 4 hour to get a bullish reversal. So again, there's only 5 minutes left on this candle. We'll see soon enough. If that next candle holds at this trendline support and starts to push up, I might actually get into some short-term trades on the alts. So we should probably run through some of the alts now, since we only have a few minutes till we see that. And that way, if we spot anything that starts to move, we can always hop in, see what we can spot first. And then the other part of his question was, what would be the trigger to get in long on a close of the hourly, the 4 hour, or tomorrow's daily close? So just to finish out my thought on that, it does depend on which time frame. If you're talking about short-term surgical trades with a tight stop loss, you want to get confirmation more immediately, and that's where you'd want to wait for that 4 hour. If the 4 hour chart looks like it's reversing, then you're in a good position. Now, just to give you an example, you see how we had this move up and this move, well, let me go back here. This big move up, and then this move down, right? And then this big move up, and this move down. During this move up, right, if you look at the smaller moves, you have a big green move and a smaller red move, and a big green move and a smaller red move. Over here on the way down, you have a big red move down, small green bounce. Big red move down, small green bounce. Big red move down, and then it reverses again, where you get a big green up, small red down. Big green up, small red down. This is a really good way to visualize it. Guess what's happening here, right? Just from looking at this chart, I can tell you. From the bottom right here to the top of right here on this hourly chart with all these swings right on the Stoch, like here, the bottom to the top right here. This follows a Stoch. Look at the Stoch. Bottom to top, to bottom to top, to bottom to top. That's happening. Bottom to top of the Stoch, to the bottom of the Stoch, to the top of the Stoch, to the bottom of the Stoch, to the top of the Stoch, right? So the up and down is perfectly mirrored between the price and the Stoch. Every up and down swing on the Stoch is mirroring an up and down swing on the price. The reason why this is overall trending up is because the 4 hour model this is the bottom to the top of the Stoch on the 4 hour. Let me show you what I mean. So if I do this right here to right here, bottom to the top, we have all these ups and downs on the Stoch, right? And now if I go to the, this is the 4 hour. I meant to do it the hourly to the daily. But you could see the same thing, same principle at play, right? So I thought I was talking about the hourly of the 4 hour, but I actually was on the 4 hour. Same exact thing. Those were the 4 hour chart up and downs, right? And look, this was a swing up on the daily. You see what I mean? So even without knowing, even without looking at the daily chart, just from looking at the 4 hour chart, looking at the structure of these up and down trends, I could tell you that the bottom to top here, the next time frame up, even if I was going from hourly to the 4 hour, it doesn't matter. The next time frame up, this was an upswing, right? Same thing here. So this is top to bottom, where we had bigger move down and a small move up and a bigger move down and a small move up every time we have the reversal on the Stoch. If you go up to the next time frame on the daily, that corresponds from here, top to bottom, a downswing on the Stoch. And I started this thinking that I was on the hourly, same thing. If I'm looking at the hourly here, and you can see from here to here, right? This is that whole daily run, and within that structure, you can see bigger up, smaller down, bigger up, smaller down, and that's happening at the next time frame up on the 4 hour. So you can see these structures and know automatically what's going on, because it's all like every time frame is just a magnified version of what's happening, because you're going down a level. Once you start to visualize it that way, it's so much easier to understand. So that's why the 4 hour tends to be really, really good for identifying the runs that matter, because if I was to get into a trade based on the hourly, it could be in and out, it could be over in one quick cycle. But if I'm getting into a trade when the 4 hour is starting a whole cycle up based on the daily like this, then I know if I started buying in down here at the bottom, when the daily and the 4 hour are both at the bottom, then I can get this whole run up. But if I get in right here when the 4 hour chart has a reset on the Stoch right here, but I look at the daily and the daily is already halfway up on the Stoch and getting close to the top, well, now I only have this small move before we get that bigger daily reversal, right? Make sense? All right, 22 target came from measuring the height of the triangle. Oh, okay. Where you measure down the proportion, the height of the left side of the triangle, and mirror that on the other side. Yeah, I don't. That only works if it's a floating triangle. If it's a pennant like that with support underneath it, I don't know if that really applies. Because I never calculate it that way. I always look for individual supports and then make a determination based on that. I find fault in the concepts of, which is why I hate textbook explanations for some of these things, because these concepts where you can visualize it and you can identify a pattern yourself, and then some guy who read about something in a textbook, they're like, well, technically it should be doing X, Y, or Z, and it's like, yeah, but in the real world it doesn't always do that. And a support, if you have a strong support, it's going to hold regardless of whether or not you think there's a potential target further down, because every target needs to be somewhere where there's a support. It's not going to stop in the middle of nowhere. It's always going to go to a support. So identifying the supports and the potential targets is far superior to setting some arbitrary level. Except Fibonacci. Fibonacci levels are different. So the other question, Oxman said, what about buying here with a tight SL below local lows? Well, so that's, again, what I was talking about is like, it might not be, I mean, if you look at, to be honest, right, so the hourly is fully reset. Like, you could theoretically buy Bitcoin right here, right? And say your stop loss goes below that trendline support, 2.5% below your entry. If you were to do that here, we may end up with like an incredible entry that you can go and brag to everybody about and be like, dude, look at this. I got in at the beginning of this really big run and I got that precision of an entry right at the bottom. Sometimes it works out that way. But at this point, that certainly is possible because everything is pretty much reset, but we're not 100% there yet. Like, the hourly is reset. The 4 hours really low, but we haven't actually gotten any sort of confirmation of a reversal. I would probably wait one more 4-hour candle, and if on the next 4-hour candle we have the Stoch is fully reversed and we actually get that crossover where it's starting to turn up, I would feel more comfortable entering there. If I didn't get stopped out on my trade today and yesterday, and I didn't lose a little bit of money already, I'd be more open to doing it, but instead I already took, obviously my losses are small because I had a tight stop loss, but I'd be more open to trying that if I didn't already take a small loss. But, if you're sitting on a nice profit from your recent trades and you haven't really taken a loss, it's not a bad idea to get in right here because the prospect is you could end up with a pretty awesome story. Like, look how precision that entry was, because there's a good chance we could bounce right from here. We're immediately getting some green action, that initial start on the next 4-hour candle. So it's certainly possible. If this 4-hour candle starts pumping back up, it could be big. That could be the start. Because once we get that bullish crossover and we're starting a new trend up on the 4-hour Stoch, once that happens, that daily is going to start looking to cross over too. There's still 20 hours left on this candle, though, so we won't really have confirmation until tomorrow. But if we end up getting confirmation tomorrow that at least the hourly, the 4-hour, and the daily all lined up and started reversing, then that could suggest that the weekly is going to do the same, which means we could be in store for a really big run. This is, the circumstances we have right here, what we're looking at, this current model really is a perfect representation of how to use multiple time frames and how important it is to to look at how they interact and how one time frame affects another and how it creates that cascading effect. Would be cool if TradingView could alert under multiple conditions: hourly, 4-hour, daily, weekly, Stoch, agree. Could you do that? You could probably do that, actually. You really can't automate that with the Stoch either, because the way it works, you need to be able to look at it, and like the human brain needs to be involved because there's too much logic going on, and you need to be able to look at it and say, all right, well, the Stoch looks like it's turning bullish on this time frame, but then one quick dump on a candle and it can uncross. That's why I talk about confirmation. So like right here, for instance, right? Let me show you an example. See how sometimes you'll get like this bullish crossover, right? And then it'll cross back down for a second and then go back. So sometimes that can happen and you get that zigzag effect where the Stoch isn't perfectly parallel with a nice clean reversal and that's it. So what actually happens is right here, for instance, if we got a really big green candle, right? If we get a big green candle back to 35K right here on the 4-hour chart, the blue line would jump over the orange line and you would have them crossing over, right? And if that candle stays open, it's going to have that bullish crossover. But then if right before the candle close, it drops all the way back to the opening price down here, it's going to uncross and go back to looking just like this. So until you get confirmation where you have that crossover and bullish reversal with a candle closed, it's not over yet because it can still uncross if it doesn't actually hold. That's why waiting for confirmation is really important. But I think we're really close. I really do. I think, like, I don't want to get in yet because there's still a chance that it doesn't hold. There's still a chance we could test the 30K support down here. And then there's a really small chance that that 30K fails. I think if it goes lower, I would be blown away if that 30K support failed. It really shouldn't. That support should be holding there for quite a bit. But yeah, we can figure it out. Figure it out otherwise. All right, let's look at some of the alts and see if we can spot anything that looks essentially like what we're seeing on the majors. If we can spot some alts like that, we might be able to identify those real big movers coming up. I already have a few in mind that I think might be ready to make a big run. Ox said BTC is also at 786 local top. On which time frame? What do you mean? I'm trying to see if I could see another pattern. Then we'll look at some alts. All right, let's look at some of the alts. On the 4-hour you were talking about? What do you mean it's at the 786 of the local high? You mean the retrace from the local high? I see what you mean. There we go. I figured out what you were getting at. Yeah, so from that initial run, right, from the initial bottom to the top bounce, this support ends up right where the 786 is, which is interesting because that initial dump went down to the 786, then there was a quick wick, and it immediately recovered to that level before pushing up again. The next dump got really close to the 786 again, so seems to be there's also a good support there as well. Hold on, I'm just looking at my other display for a second. Stand by a second. I have a couple older charts after I erased some of the stuff I had on TradingView. Let me just look at something. See, now I'm fucking with myself. I'm really tempted to get into a trade here. I don't want to eat another loss. Alright, I might... The hourly's starting to turn up. The 4 hour is like so close to being there. I like that I had this trend line drawn out. This is such a hard decision to make, though. The shorter time frames have been kind of useless. Although the fact that we have massive bullish divergence on the lower time frames as well. This is why all time frames are important. You know, all the way from swing trades, long term, to swing to scalps, like all different levels. Yeah, Ethereum's bouncing a little bit more aggressively. So Ethereum is not as tight. That's tougher. Am I going to regret this? So yeah, this was a really strong support, right? That support right here. Every time it came back down, it was bouncing there, and then it broke through here. Well, now it's resistance. If it gets back above that resistance and becomes support again, it could be a worthwhile entry. I think I have to get in. I'll just have to start with a smaller amount. Everything is still red. Like, the idea of getting in now, I just know that if I end up getting stopped out, I'm going to be pissed, and I'm going to say, like, damn it, I knew that, you know, it was risky, but I can't help it. It really does look good. I just feel like, what are the odds that right as I start the stream, I notice all these time frames simultaneously matching up perfectly. It's almost like too good to be true, you know? This is a strong bull flag, too. An RSR. Yeah, like, what are the odds that it just comes together like this? Because check this out. And I could drop right where the current price is. If I drop a horizontal around, look, that support plus the trend line, right? This support followed it over here. Boom, boom, boom. All those supports, right? So there happens to be all that other support right there, including this wick right here held right at that level. These wicks were holding right at that level. All these attempts up. All these candles trying to come back up to get back above it. And then we got those splits right there. RSI is super oversold. The last time it was this low, we got a bounce. The last time before that, it was this low. We got a bounce. The last time it was that low before that was all the way down here before the big run up. The 4 hour model. Looks ready to bounce. I have to do it. I have to. I can enter now in RSR, set my stop loss. Just under 3% below my entry. I'd like to get in a little bit lower. Let me see what the lower time frames say, because I might be able to get a little dip. See, even here, we're super oversold on these oscillators. So the 5-minute Stokes really high. And that usually means we might get a little bit of a dip to buy in at a slightly lower price. Because it'll make a big difference. That small drop in price, if I were to get in just a tiny bit lower, I can get my stop loss kind of where I want it and still keep my SL under 275. All right, I'm going to buy a little bit of RSR right now, actually. And then what I'll do is I'll... All right, I'm doing it. I'm just going to grab some RSR here, and then I'm going to set a couple buy orders a little bit lower, so if it does get that little dip based on the 5-minute chart, I'll get in. I really like this. I want to be a little bit standoffish because I took small losses earlier. It's not like I got wrecked or anything, but I just don't want to lose. I don't want to be wrong 3 times in a row, but I can't help it. This looks really, really good. I got to take the chance. I have to. Some of these really do look just too perfect. All right, I'm doing it. All right, hold on. I'm just placing my order on my phone really quick for RSR. So I'm getting a little bit of RSR. I'm buying maybe like half as much as I would like, and then if we do get a little bit of a dip, I'll set a couple buy orders a little bit lower, closer to like maybe 32.15 around there. If that gets triggered, I'll know that my alarms... If that alarm gets triggered, I'll know that my orders got filled because I'm going to place. So all I need is a tiny little dip. I just market bought a couple orders right here. And then depending on how things play out. Yeah. Dunskies. Let me finish this order. Stand by. Oh, you know what? Let me see something. All right, order's in, so we're good. I got a little bit here, and I set another order a little bit lower. All right. I don't want to get too cocky. I really, really, really like what we're seeing here. It's worth the risk. It just is. It's that simple. It's worth the risk. Where is... Here we go. Okay. I'm just posting to the group and letting everybody else know. All right, so BNB is something that I expected to potentially have a solid run. Let me see if I can justify an entry, see how she looks. The hell? Oh, I switched to the wrong one. Okay, so similar situation, right? Like just like what I was showing you with RSR. Watch. So pretty much right where we just settled, and there's all that support was over here, and then all these rejections, this big support, all these reversals occur right there. I call them splits, where you split the candles right at the support or resistance as it goes the other way. Oversold RSI, everything. All right, let me look at the 4 hour really quick and see if I get a similar bullish scenario. I got an order in. I just did it. All right, I'm doing same thing. Smaller order. I'm not worried about the big wick down, and in this case, I actually set a tighter stop loss. So I did a smaller order on BNB with a tighter stop loss. Shit, I really better not regret this. I can't help it. Some of these trades really, really are just mesmerizing me because they're lined up so goddamn consistently. All right, now DOT has been one of my babies of late. I have a really, really nice long-term bag on DOT. She's also back from that last run, retraced almost exactly to the 786. Almost got a reset on the daily. Link is another one that might be worth looking at. Let's see, setup. Let's see. Look at this. See? Same thing on Link. Main support, main support. See this? That support really is interesting too. I think fuck me. So the only reason why I'm hesitant on Link is, unlike the other ones, I can't. If I did this, my stop loss would have to go a little bit lower. I might have to stay back and not fuck with Link. Doge is a little bit too manipulated. It can be tougher. I'm not going to mess with Doge. Alright, what else? There's got to be something on the alts here. It's getting late. Let me run through these a little bit faster. Let's see if I can spot anything else. So far, BNB and RSR. Pull the trigger. I wanted to make a move on Ethereum too, although I think BTC might be a good bet. Again, right at the 786. So in the case of BTC, if I were to buy in this case, my SL goes below 2.5% below my entry. The hourly, so yeah, I'm pretty sure this could start a 4-hour reversal. SL 2.5% below entry. I'm not worried about a target right now, but I would expect to at least try to push through the bottom of the cloud if we can push up, based here on the 4-hour model. So let me share that with the group. But before I do that, I'm just going to quickly upload this to my other... Oh, let me get my other order in, actually. I got one more order in. And I got to put this in my list that I can upload to my tracking software, too. But I'll do all that later. Alright, let me get my order in. And then I'll share that with the group after. Alright, I'm good. Alright. It is late. Any questions? I think I might want to run through a couple more charts just to see if anything else looks like it might be worth. Because, again, it's still early to get in. Like, I don't have 100% confirmation, but it's just so close to the bottom that I feel like putting in a little bit, just getting, like, 20, 30, 40% in there. If we do get that initial breakout, I'll be so happy that I did. And if it fails, I'm really risking a tiny amount of money. I mean, I have a tight stop loss. These trades all have a stop loss between 2 and 3%, and I didn't put that much into them. I'm only putting in, a much smaller percentage of what I would if I was going like in hard. So I'll look at a couple of the other alts. I'll take a look at VTHO because that's one of my babies, one of my favorite long-term plays with biggest potential gains. Same thing with Key, Cody. IOTX, they have a propensity to make massive runs, so it's worth looking at those two. FET, I'll take a look at that really quick. I'm going to run through my watch list. I mean, right now, I've gotten into 3 trades. Let me share this one. I'm still telling the group. I'm going to make sure everybody in the group knows. 2. Running trades above. Please watch my live stream ending in a few minutes. To fully understand, it's early to get in and therefore a bit risky since we don't have confirmation yet. I didn't want to miss out, so I went for a few trades now. I went into only a few trades now, and will make more moves once get confirmation if my very bullish model indeed All right, leave that alert there. All right, RSR came down a little bit, right? Just enough to fill my other order. So, yeah, 3 trades is enough. I don't want to open up too much more. We're right on the line. It's very possible we get a quick wick down. It hits my stop loss, and then we get the big breakout. So, again, that's why I only put in partial money. Tight stop loss. I only did 3 trades, and I only put a small amount into each trade. In the case of BTC, I put in like half as much as I would normally put in, and then with R&R and BNB, it's probably closer to like 30% of what I would totally put in. Although RSR did fill my lower order, so now I'm probably like 50% in on that one too of what I would normally do in a short-term trade. Let me run down the watch list here. I want to see if there's anything else that looks like it's really enticing. But chances are I'm going to want to stay out and everything else. I kind of want to get back into DOT too. I'm not going to lie. But I think I'm just going to wait until morning. And then if we start breaking up, I'm going to FOMO into everything because it means I was right. And I already have a nice profit from getting into these early trades if that were to happen. That I'd be a lot more liberal tomorrow morning. Like if I wake up tomorrow morning and everything is green and I get confirmation of the hourly and the 4-hour model and it looks like it's going to confirm on the daily, I'm probably going to go all in. Because that's going to be like best case scenario, right? And the best part about it is if I have to pay a little bit more tomorrow, that'll be fine because I made money by getting into such an insanely precise bottom call tonight that just those 3 trades alone will net me a pretty nice profit, enough that I can afford to pay a little bit more tomorrow without feeling bad about it. So it works out really well that way. All right, let me cycle through my watch list here. I want to see if anything else looks like it's really got my name on it, but I'm assuming I'm probably going to stay out otherwise, but who knows? I might spot something that's just too good to turn up. Let's see. All right, so run through these. Come on, like this is just teasing me. How am I not getting into Link? Oh, there's so much support right here. It's like a perfect horizontal support. Your guys are killing me. You're making me do this. See, I'm not doing it because that's why. If I bought it right now, if I wanted to put my stop loss below everything else, it would be like over 4%, over 3.5% below my entry, and I don't want to take the extra risk, so I'm not going to do that. Yeah, it would be too risky. I'm not doing it. All right, let's run through the rest of these. So I'm assuming the hourly is probably moving up. Anybody else have any questions really quick? Drop them in the chat because I only have a few minutes. I'm going to have to go to sleep in a few minutes. I'm already starting to feel super tired. And the other night I tried to do a live stream and I was like half asleep. And I just got to stop doing it because when I'm in that super tired mode, I'm useless. Like I end up just repeating myself half the time. And I'm not very efficient. I'm not a very good teacher when I'm that tired. So I'm going to go to sleep as soon as we're done with this stream in a few minutes. But if you guys have anything you wanted me to clarify or explain in more detail, let me know. And I can at least take a few more minutes to discuss whatever you want with you guys. Let's see here. Where's sorry, 1 second. Here we go. Oh, come on. There's strong support on JST. Strong support. Everything is the same. Same strong support structure. See, Sol's interesting because that actually did remain bullish. Managed to actually hold bullish when everything else was dumping. It should throw off some of the other higher time frames. 4 hours close to resetting. All see, like, this is what I like about Sol here on the 4 hour. See the daily, right? The daily is the top of the cloud for really strong support, but it's also just starting to turn down. So that's why I'd be more standoffish now. If you get in, yeah, that would be worth it. But I think because the daily is so high, I'm better off just staying out of Sol for now. All right, let's see. I'm gonna quickly run through the rest of these. I'm going to look at the 2 things that somebody had suggested. VTHO, which is coming up, and then 1. And then after we look at those, I am going to go crash. Wait a minute. Hold on. Oops. OGN does look enticing, but I'm not doing it. Not doing it. Do not let me do it. Oh, come on, dude. Are you kidding me right now? Oh, come on. You're not giving me much of a choice here. Look at this. Boom, 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 boom. Boom, 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 boom. Like, are you kidding me with this support right here on Sushi? with the daily resetting. All right, if you don't get into a long-term bag on sushi right here, you're absolutely fucking retarded. All right, so I'm entering long-term on sushi right here. So what I'm going to be doing is I'm setting a stop loss about 8.25% below my entry. Now what I'm doing is with this sushi long-term play, 8% is a big stop loss, right? So when I'm putting a much larger stop loss like that, where I could potentially lose up to 8%, what I'll do is I'm not putting in nearly as much capital. So if I was putting in $10,000 into a trade and you risk 10%, you're going to potentially lose out of $10,000, you're going to lose 10%, which is $1,000, right? So you wouldn't want to do that. But if you're putting $10,000 into a trade and you're risking 1%, right? Well, let me do it the other way around. The best way I usually explain this with my longer term stuff is if I was putting in $10,000 into a trade and my normal stop loss is only, 1.5% below my entry, out of that 10 grand, I'd only be risking $150, right? At 1.5% below my entry. At most, I'd lose $150. So if I'm going to risk instead of 1.5%, if I doubled that stop loss and I put my stop loss 3% below my entry, I would lose twice as much. Instead of losing $150 on a $10,000 trade, if I got stopped out on a $10,000 trade, I'd lose $300, right? So what I could do then, I can invest half as much, and I can set my stop loss at 3% below my entry. So if my stop loss is at 3% below my entry, but instead of investing 10 grand, I only invest 5 grand, well, now my maximum loss would still be $150, the same as if I did a larger trade with a tighter stop loss, right? So when I do longer term trades with a stop loss, what I consider a mid to long term trade, that's how I compensate for it. So even though I'm using a really low stop loss of 8%, I'm investing less capital because the potential on this is so big. It's not like a short term trade where I could make 10, 20, 30, or 40, or 50%. I could potentially make dramatically more and much more quickly on a trade like this. But I'm also taking a portion of this trade and I'm not setting a stop loss. So I already have a long-term sushi bag from way back when it was like under $6, I think it was under $5. So I'm essentially doing the same thing. I'm adding a long-term hold where I have no intention of selling and I'm not even using a stop loss. I'm obviously putting a lot less money into that. I'm not putting a huge amount of money in, but if you don't get in to at least a small bag here just to hold long term, whether or not you use a stop, I think it's good to have one with no stop loss just in case there's quick wicks and stuff. But this support right here is incredible, and the fact that it's fully resetting on the oscillators just like the other coins we've been looking at, with strong bullish divergence on the RSI on the daily. Trending up on the RSI here with the downtrend on the daily price action. Everything about this is a really, really good mid to long term trade. The only issue with it is having any stop loss on a trade like this. There could be a quick wick and it stops you out. That's why I'm putting probably like 30 or 40% of the position I'm going to buy right now. I'm going to set with no stop loss, and then 60% of it, 70% of it, I'll use a stop loss, although I might just do 50-50 to be honest. Let me add this to the group as a mid to long-term hold. All right. Okay, last couple I'm even looking at, and then I really have to go to sleep. I'm not messing around anymore. I'm super tired. Alpha doesn't look as good as some of the others, so it makes me feel better. Finally, that's one that doesn't look really good. Everything is looking bullish. Like, everything is showing the multiple time frame confluence on the Stoch. If it's wrong, it's fine. It's totally fine. If it's wrong and it goes down further, it's not the end of the world. I didn't get into that many trades. I'm not going to take a huge loss. And it was definitely worth the risk to get in, given how perfect the model is right now. But this model is just so good right now. I pray to God that this holds and we don't get some sort of FUD that crashes the market, because it is so friggin' perfect right now. Here, that's my original, one of my original trades on VTHO, along with this huge pump on. Did really well on VTHO. One of my all-timers. I added to my long-term position there, so I'm actually down a little bit on that, but that's fine. I bought up in this general vicinity. It's not too far below. Good support there. So VTHO, again, long-term has been one of my favorite performers. It looks like the weekly is fully reset, turning up like that. Should I do another VTHO? I gotta admit, that weekly turning up like that. So I'm not adding. I already have a long-term VTHO bag that I got into recently. If you were looking for a potential entry on VTHO, I would get in now. The only reason I'm not is because I already have a good amount as a long-term hold. But if you were looking to get in, I would get into this if I didn't already have it. This would be a no-brainer. Just like what I showed you with sushi, I want to get into VTHO just as bad, except I'm already in VTHO. Alright, I'm done. I give up. Was it hot or one that somebody wanted me to look at? One? Alright, I'll take a look at Harmony. So I'll leave you with this. Anything that, like what I showed you, anything that has all these different time frames showing confluence on the Stoch, that's one of the things you want to look for, right? So right now, so assuming you're me, you're looking for trades, right? This is what I would do. I'd look at the 4 hour and zoom out like this. I would look at the current price where the dotted line is. You'd be like, wow, just like Jesse said, look, all these supports, like all the times we bounce right off of this level, right here, big save right there. Back over here, that was a strong resistance. It was having trouble breaking above. So there's clearly a good level here. Now let's take a look and see what's going on with the Stoch. The Stoch is bottoming out down here on the 4 hour. Let's go down a time frame, and we see we just dipped down. We're starting to turn up. And then I got, look at the daily Stoch. Why am I stuck? I have the 7 key stuck down. That doesn't help. So I'd look for multiple time frames that have the Stoch reset. We already have a good horizontal support right there. So the daily has a nice reset on the Stoch. The weekly is a little bit more hit or miss. Now we're not seeing a lot of the Ichimoku dynamic supports at play here because it's too far. Like that's 20% above. I think 1 would also be a good trade. I like VTHO more with the way we have the all right, yeah, we got it. There's enough time frames here. I would say hot qualifies. I would get in. I'm just not opening up new trades right now. Plus, again, there's no tight support here. So even though right now we're sitting on a good horizontal support, like look at the dotted line. That's the current price is that dotted green line. That's exactly where we bounced on all these candles, going back all the way over to here. The only issue here is if you were to buy at the current price, your stop loss would have to go like 7% below your entry to do it. So I would get into 1 now as a long-term play, but I wouldn't do a short-term play on it. I'm not doing anything because I already have enough stuff going. All right, any questions you guys have before I sign off? I'm super tired. I think I need to get to bed right away. It's almost 1 o'clock, and I promised myself I would go to bed earlier and get back on schedule so I could be more useful to you guys, so I'm not doing live streams at 3 a.m. when I'm half asleep. Oh, look at that. I have 2.99k subs on YouTube. Make sure you share my content and tell everybody to sign up for to subscribe and hit the notification bell for my account so I can start getting some more followers on YouTube. 2,989 right now. All right. Yep, that's it. We're good to go. Anybody else have any other questions? We're all set, right? Make sure you like this stream. There's still 10 people in the stream right now, and only 4 people have given me a thumbs up. So that means 6 of you haven't yet. Do it right now, or I'm gonna force choke you. Do it. Do it. I swear to God. If I don't see the likes tick up right now, I'm banging your girlfriend. It's just that simple. It's gonna happen. All right, there's 5. Come on, keep going. I'm going to hack it. Oh, 6. All right. 4 people left. 4. Am I going to hack you and bang your chick? Yes or no? Okay, 7. 3 left. 8. 2 more. See, the last 2 left, they just know that their girlfriends are fat and evil, so they're just like, haha, Jesse's going to get stuck with our girlfriend. Let's let him do it. See? Smart. Well played. All right, thanks, guys. I appreciate the support. Make sure you share my stuff. Since Twitter banned me, YouTube has actually been great. So make sure you, like all the videos I share publicly, the stuff for just the group, obviously you guys don't share it. Unless I share something publicly, like the stuff that's just for the group, for you guys, you pay for it. You know, like you guys have access to that content. But when I do share stuff publicly that is just on my regular channel for everybody to see, feel free to spread that around everywhere, because the more people see my analysis, hopefully I'll get more followers on, more subscribers on YouTube, and that'll help me recover some of my losses after getting screwed up by Jack, that douchebag, banning me on Twitter. All right, that's it. I'm going to go get some sleep. In the morning, we'll see if I was right. If we don't immediately break out, it doesn't mean the model's doomed to fail. There's still a chance we could go lower. Remember, I said, even on Bitcoin, we could still dump all the way to 30K. It's still theoretically possible. So far, it's holding well. So far, I mean, everything that I explained looks perfect. Like, it's just, if I wrote a textbook about my strategies and my TA models and everything, like, everything I'm showing you guys, like, the reason I got so excited with sushi is it just looks so perfect. They all look so perfect. But that's happened a few times. Ever since the first big dump, when Elon first tweeted some shit right as the market was already iffy and everything tanked for 36 hours or 48 hours straight, ever since then, there have been a few times where things looked really good, and then we ended up going down, and I was wrong, and I took a loss. Now, Granted, they've never looked this good. This really, really looks good. And I didn't even realize how good it was till we were into the stream. I was actually going to show you guys more of a bearish model that I was considering. Then when I noticed that the weekly, the daily, and the 4-hour were all in 100% confluence and agreement on the Stoch, I don't think I've seen that. I don't know the last time I've seen it oriented that perfectly. So it was worth the risk getting in now. Hopefully in the morning things look green, but they're not too green. Like if I can go to sleep now and I wake up and everything's up like 5%, that'd be perfect. Because then we can get into more stuff. We can take a little bit more risk, especially since we're already going to be up on the few trades we got into already, right? That would be great. If I wake up and everything's up 20%, I'll be happy that my model hit so perfectly. I'm also going to be a little bit pissed that I didn't put more money into the market. But I got, I opened up 4 or 5 trades. I think I'll do all right because things look really good right now. And if I end up being wrong, luckily I won't take a big loss because those stop losses are all pretty tight. I don't have any stop losses that are like 6% below my entry on a short-term trade, so we should be good to go. All right, I'm going to go crash. But if you guys need me or if you have any important questions, just tag me in chat in the Discord group. And tag me if you have any questions, and I'll hop on because I'll be up for another half hour or so before I actually go to sleep. All right, thanks for coming by. If you guys aren't in premium, if you're just basic members, I invited people to this stream who are basic members. Usually it's only for premium. As you can tell, I really like teaching this shit, so if you're in a position to do so and you want to upgrade to premium, I would appreciate it. And if you're already in premium and you wanted to renew for like a 1-year membership and get a discount, that would help too. It's really helpful to get multiple months, people who like are committed to the group for multiple months, because if I know people are going to be here, I'm not going anywhere. If I feel like next month I'm only going to have 20 members, well, then it's a lot harder for me to justify doing the group. I'm better off just trading full time. And it's been hard bringing new people in without having Twitter anymore. So you guys, my existing supporters who renew and who upgrade for multiple months ahead of time, you are the people who are allowing me to keep doing this group, because I'm not able to bring a lot of new people in right now. So if it wasn't for you guys, I'd be screwed. So I love you, and if you wanted to sign up for multiple months early and get a discount or something, that would be helpful, but you obviously don't have to. I appreciate your support no matter what, even if you're a cheapskate who only does basic every month. Just kidding. I love you guys too. All right. Tag me if you need me, otherwise I'll talk to you in the morning. Thanks, guys.